Evening, everybody. This is Pat Walker, Mission Winners. Welcome aboard. Glad you're here. I won't waste your time. Here's the best part. This isn't about me talking about stuff. It's me answering your questions. It's relevant to you. So let's get down to it. And again, I'm glad you're here. And I looked through great questions, and we're just going to run through them all, okay? First section has to do with entries and timing, okay? And these questions are grouped by subject matter, so it kind of all goes together. Entries and timing. First questions from J-12 or J period 12. Do you have a specific time window during the day when you usually buy or avoid buying? And I'll say the questions twice, okay? Do you have a specific time window during the day when you usually buy or avoid buying? Yes, I rarely buy right at the open, okay? In fact, I can't remember the last time I bought right at the open. I don't do that. Especially if it's a gap up. I always wait, okay? Normally I wait 20 minutes, maybe a half an hour, just to see what happens. One of the things I want to avoid is chase price, and then you peg it, and the thing drops. And you go, God, why did I do that? Protects us mentally, it protects us financially, but it also protects us mentally. You hate to start off the day on a bad note. It just kind of carries forth maybe for the rest of the day. So I don't want to do that. Again, specifically, I rarely buy right at the open. And if it's a gap up, I definitely wait 5 to 10 minutes or so and watch it, and then take it down to a lesser time frame, like a 10-minute chart, and see if we can find a specific entry. And what do we look for? A good price entry, simple price entry on the chart, backed by volume. The next question is from Tomas. How do you approach buying a breakout on a gap up in the morning? Well, that kind of goes in there with the first question, okay? I wait 5 to 10 minutes. I wait 5 to 10 minutes just to see what happens. J12, getting back to it. Do you have a specific time window during the day when you usually buy or avoid buying? Right at the open, I rarely buy. And during the day, anytime from that point on is fine. Will I buy right at the close? Yes, I will. If a stock is basing and right into the close, like on a 10-minute chart, there's a big volume surge coming into it with strong price action, that can be a great trigger to buy some. But it's got to have volume coming into it, and it has to make sense on the daily chart. And that can be a great leg up because you can buy it, and frequently the next morning, the stock gaps up. Chris asked a question here. If a breakout clears, by the way, I state the question so everybody knows what I'm talking about. If a breakout clears the pivot early in the session, but volume is light on the 10 or 30-minute charts, do you still buy and wait for volume later in the day or skip it? Great question. I'll say it again. If a breakout clears the pivot early in the session, but volume is light on the 10 or 30-minute charts, do you still buy or wait? Great question. If there's no volume or very light volume coming into the stock in the morning or any time during the day, I normally will back off buying. Volume is the fuel that lifts the stock off the pad. Volume, this is really important, folks. Volume tells us other people see what we see and they're acting on it. Flip that coin. No volume? Well, I guess people see it, but it ain't nobody else buying it. Well, if they're not buying it, I'm not going to buy it either. It takes people buying to push the price. There we go. So now let's move on to risk and loss control. How do you determine how much risk you are willing to take? Is it the same for every trade? No, I will adjust risk depending on the chart setup, okay? But this is the key foundation. I am really big, I'm not kidding, on simple chart entry. Why? It's easy for me to see. It's easy for you to see. It's easy for others to see, which increases the potential that A, they see it, and B, they will buy also. Flip that coin. You have a chart set up, but nobody knows about it. You're the only person on the face of the earth that knows about it. There's nobody else buying it. We're not the lone wolf. I want to see other people buying it, and that is measured by price push, backed by volume. And if it's early in the morning, you can take it down to a 10-minute chart and look for that volume surge. Key point though, no volume, no buy. Just kind of wait on that. How do you determine how much risk you're willing to take? Is it the same for every trade? This is why I'm very stringent on our entries and why I demand a simple chart entry. Price is good above the line and bad below. Bad below. It helps us control risk. And we can just take it down, like I said, to a 10-minute chart. We're not day trading, by the way. We're not in and out. Our goal is to try to buy it on a chart that makes sense on the weekly or daily chart, and then volume confirmation on lesser time frames for a reliable trigger to buy. Okay? Iraj, and if I mispronounce a name, please accept my apology. I'm not trying to be rude. Strategy to limit losses. Ask twice, strong interest. Yeah, this is why I love simple chart entry. Price is good above the line, bad below. It helps us control risk. We're very pragmatic here. If I said, folks, I've got a chart pattern that's pretty dang fancy. Nobody knows about it. This is going to be awesome for us. You'd say, well, God, and nobody knows about it. They're not going to see it, so they're not going to buy it. It's common sense. Much of sound investing is common sense, fundamentally and technically. So we use that. Slack Eye, and if I pronounce your name, please accept my apologies. How do you invest with a full-time job? Do you use hard stops? And how do you adjust stops once it moves up? Great question. See, a lot of people have full-time jobs. One of the first things you do is this. Only focus on simple charts, okay? It increases the probabilities other people will see it and they will buy also. So you've lessened that risk point, okay? Another key point, you've got a full-time job. One thing you don't want to do is buy a bunch of stocks that you can't watch during the day. It's too much stress for you and it'll mess you up from your regular job, which isn't fair to you or your employer. Hold on one second. My apologies. So how do you invest? Full-time job? Use hard stops. Yes. And adjust stops. If it starts to lift up, take it down to a 10-minute chart. It starts to make a good move, or a 30-minute chart. Even on the daily chart, it's pushing away from price. You can quickly raise your stop up to break even. And that's huge. Worst case scenario, you won't lose. Think about that. That's good for the pocketbook and it's good for the head. And it lessens stress, which leads to clearer thinking. Okay, you all know I've got degrees in psychology. And yeah, it's a major portion of this, folks. I got to tell you, it's what's going on between our ears. So our tactics help eliminate or minimize stress, which really helps. Do you use hard stops? Yes. A key point related to that, though, hey, if it keeps going up, raise the stop. I want to address this, though. Yes, do I use buy stops and sell stops? They're wonderful. But use stops. Do not use stop limits, like a sell stop limit or a buy stop limit. It can run right through your price and you'll never get filled. So that's a key lesson a lot of people don't know. Buy stops, sell stops, but not buy stops or sell stops limits. Okay? The next question, how do you handle stops after a stock has made a move? I'll watch it on the daily chart and I'll take a look at the hourly or 30-minute, maybe even 10-minute if it's early in the morning. And if it's pushed away and I'm up, a point or two, I'll put my stop at least at break even, if not a little bit above it. So what does that do for us? It lessens stress. Think about this. Stress derails thought processes, folks. I've studied it, okay, extensively. So by minimizing or eliminating stress, it leads to clear thinking. And think about this, as far as stress is concerned, you buy it, it pushes up, you raise your stop to a little bit above your buy price. You can rest. We're not getting sloppy or complacent. We still watch it. If it continues going up, you could raise your stop up a little bit. But don't raise it up so much that if it drops just a hair, you're stopped out. All right? And base most of your decisions on daily charts. And early in the morning, look at the hourly or 30-minute or 10-minute chart. And just see if there's a spot that makes sense for placing a stop. And by the way, our sell stop, let me be specific. And I'm going to say this again. Stops, not stop limits. Do not use stop limits. It could run right through your price on the buy side or the sell side, and you don't get filled. I've seen that happen. So I circle and say it again. Stops, buy stops or sell stops will really help you. Tied in with this also, with risk control, but also stress minimization. It's good to carry, a decent number of shares, but don't carry so many shares that it causes stress with you, because stress derails thought processes. All right. Yeah, I studied it through graduate school, so just things to be cognizant of. And if you're losing sleep over your stocks, you own too much stock. There you go. So how do you handle stops? We just discussed that. Thoughts on exponential bet sizing, risking more on A+ setups. Brightstein. Oh, yes, definitely. I will buy more. Here, the best setup is a simple base breakout. I'll buy more of that than I will a pullback setup. The setups that are the most reliable, and I'll tell you, the most reliable is a simple chart pattern that everybody can see. I'll buy more of that, but I'll buy less because it's more reliable. The odds of it working are much greater. And I'll buy less on something that is less reliable, i.e. a pullback setup. That works. Remember this too. Focus, please. Focus on the best of the best. Don't settle for junk. We're talking about your money. That's why I post to the degree I do. That's why I talk to the degree I do. It's not because I love posting and talking. Well, I love talking, I'll admit it. But I want to do you and the questions justice. And by the way, the only room I have open, you can ask Owen, honest to God truth, is our room. I don't surf. I don't go anywhere else. I will look at Investors Daily a couple of times during the day. But other than that, I'm not bopping all over the place. No, we don't do that. So here we go. Now we get into the next section, exits and trade management. Pete James, my entries are normally quite good, but I struggle with exits of winners. How do you identify points to sell into strength? You know what I'm going to do out of justice? I'm going to say the question, repeat the question, just so everybody's with me. My entries are normally quite good, but I struggle with exits of winners. How do you identify points to sell into strength? When it rallies up in price, take it down to the 30-minute or 10-minute chart. If you see it starting to fall or stall or reverse down, and especially if there's volume coming into it, that can be a good spot to sell some. And I want to quantify that further. Like 20%. Don't sell all of it, okay? And I also stress this. No day trading, no scalping. I'm not in here in and out. No. I only know one successful day trader, and he's really good. He's my brother from another mother out in California. But other than that, the best way to make money is a simple base entry and ride on a daily chart and our weekly chart and ride the trend. Let the stock work for you more than your eyes and your fingers. It will really help you. How did you manage the recent flat breakout on the dude? Well, I'll tell you what, it was a symbol-based breakout. You all can punch it up. Symbol-based breakout, and it had volume. Take a look, folks, if you have it on your screen, the volume surge on 829. People talk with their mouths and vote with their pocketbooks. Folks, they voted there. We voted too. Remember this, a chart breakout backed by volume is the key, the most reliable setup to make money. And then I'll flip the coin. No volume, no buy. I don't want to be the only person on the face of the earth that sees the setup and acts on it and nobody else buys. It's like, well, that ain't going to work. I don't want to do that. That's why I'm really hell-bent on seeing that volume pick up. It works. Here we go. Let's take this a step further. How do trading halts work? Okay. What do you do if you're in one? Pray. Pray. And I'm not trying to be funny. I'm going to say this question again. State it. How do trading halts work? And what do you do if you're in one? Well, that's exactly why I never carry a full position in any one stock, ever. The most I'll have, I might have, if it's one rockin' stock, I might have 20% of my account in one stock, but that's rare. That's rare, okay? It'll help you. You can say, I won't make as much money, and I'll say, you won't lose as much money if it goes against you. And because you know that, it decreases stress, which again leads to clear thought processes, clear decision-making processes. So what do you do if you're in one? Just watch it. You just have to watch it and watch it closely and see where it opens. But while you're waiting, have an exit plan just in case to sell. Sell some or sell all. Now, if it's a trading halt and it gaps up, well, you can let that work. That's fine. But if you have a trading halt that's gapping down and you can see it, be prepared, have a plan to sell some. Sell 20 or 25%. Keeps dropping, continue selling. And always do this, folks. Please, keep losses small. It's good for the head and it's good for the pocketbook. And especially for the head, folks. I'm not kidding. I'm sure every person listening has suffered a big loss before. Yeah, I know what it's like. I know what it's like to lose 5 figures on a stock in a matter of seconds. And it's not fun. News can do that, which leads to another important point. Be careful. Please be careful buying just before a big news announcement, i.e. an earnings report. You could be a hero or you could have a lesson that you'll never forget. I never buy just before an earnings report. Okay? And I'll also have to tell you this, given my previous positions, don't, as far as where I was, don't trade off inside information. Okay? It's illegal, and you don't want that to come up and catch you. This is hard enough. You don't need to worry about the SEC. So and it's immoral too. Don't want to do that. But if a trading halt does happen, you just have to watch it and see how it acts when it opens and have a plan keyed up to sell some. All right. And if it keeps dropping, continue. One of the best things we do at Mission Winners, limit losses, control risk, live to play another day. It will really help you. Scott asked a question. By the way, I'll just use your first names out of respect, okay? Selling discipline. Is there a new numeric measure for extended? Yeah, just looking at the chart, if it's, I don't have to put a percentage on it. If it's pushed away or gapped up from a clean consolidation price entry, that's extended. I want to buy close to the pivot. If it's not, and I still want to buy, I will buy much less shares to control risk. And somebody could say, yeah, but it's a gap up. God, you could really make a lot more money. And I could, yes, but what if it gaps up and reverses down? I could lose a lot more money. I'm big on not getting kicked in any one stock. All right. And you could say, has it ever happened to you before? Oh, yeah, definitely through the years. And you can't avoid it. It's part of investing, but you just have to manage it, which is also why never, I'll say it again, never carry a big, heavy position in any one stock. I'll quantify the statement first, further. The most I would have in any one stock, okay, the most, and it has to be absolutely perfect for me to do this, is 20% of my account. Okay? Just laying it out there. Also remember, when you're buying, we never buy a full position at one time. That's straight from canceling level 3 and 4. You ease into it. You want to get up to 100 shares? Your first purchase could be 50 shares, continues going up. Your next purchase would be 30 shares, continue going up. Your next purchase would be 20. 50, 30, 20 for a total of 100. If it doesn't go up, you only have one starter position, 50 shares. And that works. It'll keep you in the game forever. Our goal is this, is to make you money. And part of making money is making sure we don't get hurt on anything bad. We're big on risk control, and that helps us. Is it a good idea to sell after the 8 crosses below the 21 on volume? Yeah, definitely. A moving average crossover can be a reliable investing tactic, but don't argue with the price. Normally, by the time the 8's crossing through the 20, there were probably spots up higher that you could have sold some, which also, I'm going to say it again. I'll say it countless times on this webinar. Never let a good profit turn into a loss. I'm not kidding. Another one, never average down. You're wrong. Don't make yourself more wrong. Please, you're listening to a guy that, again, my only source of money supporting a family of 6 was investing profits. That was it. Okay, so I had to do it right. I'll just share that with you. Is way up. How to avoid CRDO. How to avoid grabbing defeat from the jaws of victory. What do we do here? There's CRDO. This is a daily chart. Rallies up. Okay, can they see the charts, Owen? And if not, what you all can do, it's CRDO, Cat Roger David Oscar. It rallied up, it tailed off. Oh, good. Thank you, buddy. Big reversal bar here. Thank you for the clarification. On 922, see that reversal, see the drop here on the volume pickup? It starts to stall. It's made a decent move. What do? That's a great move, as a matter of fact. What can you do? Sell some industry, and we did. We locked some profits in on it, okay? And we don't day trade. I'm basing these decisions primarily off daily charts. Let me clarify. Now, if it loses right here's the 21-day exponential. If it loses that, we'll sell more. Oh, I just want to clarify. This is the 200-period exponential. This is the 50-day, 200-day simple, 50-day simple, 21-day exponential, 8-period exponential. All right? Those are great. Use what you want, okay? I'm not trying to get you. These moving averages work great for risk management and for riding trends. Let me tell you. Let's see, is it a good time? If the 8 crosses below the 21 volume, yes, you can use a moving average crossover, but by and large, like right here, it's starting to lose the 8. This is a real world example right here. You can see we sold some. Okay, starts to run up, great run. I mean, we own this back here. Okay, refresh that and squeeze this together. See those bases there, folks? Look at that. And then look at the trend up to 21 EMA, and then it bounces off the 50-day right there. Riding trends is how you make money with a lot less hassle. Starts to lose a moving average, you can sell some. Don't sell all of it, just some. But if it keeps dropping, you know to sell more. And I'll say it again, never let a good profit turn into a loss. Scott takes it a step further. Exit immediately or wait for a recovery. No, exit immediately. Why? It keeps falling, and all of a sudden, a little problem turns into a bigger problem. And it doesn't need to be an all or none situation. Selling some, folks, can A, guarantee profits, and B, lessen risk, and C, lessen stress, which leads to clearer thinking. Yeah, I've got degrees in psychology. I know what the heck I'm talking about, okay? And stress derails thought processes in so many realms. There we go. So let's move on. Jose, thank you for the kind words. This is setups and groups. Pat has the best chart patterns. Changed my mind. I love it. I'll tell you the truth, team. Well, I never lie, okay? I've studied a lot of different charts. I've looked at millions of charts through the years. I managed a lot of money through the years, okay? And through a lot of real world analysis and investing, you figure out what works. And I will tell you, folks, you can study every dang chart there is, and you can paper trade all of them. Eventually, you have to get off of it and invest your money. I'm not saying go big, though. Ease into this until you refine your skills. But there is a vast difference psychologically between paper trading and doing it with your real money. So you can say, oh, just leap into it. No, I stress. I'm big on risk control, folks. And we have to protect two assets, financial assets and mental assets. Start small. If you can't make money, I'm going to tell you something, folks. If you can't make money with 50 shares, you ain't going to make money with 500 shares. All right? In fact, if you can't make money with 50, you're probably not going to make money with 100. Ease into it. Refine your skill sets. Develop your skill sets over time. Then, after you've experienced success, then and only then do we start to do larger. And then I have to stress this too. When you get to that point, never feel, I'm being really serious here, never feel that you have the Midas touch, like everything you do is going to be great. It ain't. Nope, it ain't going to happen. Not to anybody. Here, Bill O'Neill. Oh, God, he was the guru. Yeah, I'm thankful I met him a couple of times. Folks, I got to tell you, did he limit losses? If you read his book, you know it. He limited losses. We're big on limiting losses. We don't day trade, but you never want a major problem. Never. It'll mess you up financially, but it also messes you up psychologically. And those are two very important assets, folks. I'm not kidding. If your brain gets rattled or you become afraid, it's very difficult to make sound decisions in any realm of life, including investing. We protect that mental asset too. Also, I'm circling back to this. I'm big on controlling risk, financially and mentally. If you're just getting started in this, go small. I used to tell people at the IBD meetups, if you can't make money with 50 shares, you're probably not going to make money with 100 or 200 or 500 shares. It just ain't going to happen. Refine your skill sets. And then, and only then, after a period of consistent profitability and risk management implementation, will you get better at this. And our goal is this, folks. You don't want to be doing this for the next 6 months or 6 years. You want to do this for the rest of your life. There's nothing else I'd rather do. This, to me, this isn't work. This is fun. Yeah, it's rewarding, etc., like that. It's great, but don't kill the goose that laid the golden egg and get sloppy or complacent and throw your money out. Okay? And again, I circle back. This is why I love simple base breakouts. Here's a good one right here. Look at Tesla. Look at the simple base breakout. Look at the volume that came into it on that bar, on this bar right here. On the previous bar, right there, the stock did 103,700,000 shares. On this bar, 160, excuse me, I got that wrong. 72,000 shares on that bar. 72,000. On the breakout bar, 103,700 shares. That's a huge quantum leap. Look at the volume surge on that bar. It's like, oh, that's pretty good. And then you watch it, and then the next day, it does even more. Big money saw that breakout. We saw that breakout. This was on the key list. We were all talking about this before it broke out. And it lifts. Now, they all don't do this, but when you're prepared for it, it works out extremely well. And I need to stress this too. You don't need to know a million different chart setups. I really mean it. Master 2 or 3 different chart setups. I love the cup and a handle. I love the simple flat base. Okay. I love pullback setups to key moving averages. Okay. Master that. You don't need a bunch. Master those. Master them. Make them yours. And then turn off the noise. And in relation to that, don't get too many data inputs from everybody else. It'll cause you to lose your way. I got to drink some water. Hold on. As far as risk control is concerned, I'll say it again. Please don't try to make a killing on any, oh, like this is the one. This is the one I'm going full tilt boogie on. No, never. Always. Take your account. Let's suppose you want to get up to 7 positions. Take your total account value, and let's not talk margin. Take it and divide by 7. So you get X. Okay? Take that and divide X by 2. That's your starting position. All right? If it continues going up, you add to it. But always, always control risk and never argue with price. And you're listening to a guy that was managing a ton of money into the crash of 87. Okay? And so, yeah, I know what it's like to watch money just disappear. And I'm grateful for this. Thanks to Martin Zweig, all my managed accounts were out before the crash of 87. And I credit Dr. Martin Zweig, who had the great pleasure of meeting many years ago. He was a kind soul. Anyway, let's continue on here. Hosea, thank you for the kind words. What's right? Pat has the best chart patterns. Change my mind. I love that. I can't. I rest on these. I mean, like I said, team, some of you maybe are in the same position. My only source of money was investing profits. Oh, well, your wife was working. Yeah, she's raising 4 kids at home. Okay, that's work. That's a heck of a lot more work than what I was doing. So don't invest scared. Invest comfortably. Invest aggressively when it's good, but don't be afraid. And that's why we're so big on teaching risk control tactics. You don't have to be afraid. And here's the other part. We drive it home every day, constantly. For all of you, you know what to do. You know what to look for, and you just do it. This is what I used to teach at the IBD meetups and with our VIP members. And it's a simple phrase. If this, then that. You go, what? Yeah. If this, then that. If this happens, we do that. And we know what that is before we need to do it. Less stress. Less stress really works. Next question. What makes an A+ setup and what parameters must be present? Okay, I'll read that again. What makes an A+ setup and what parameters must be present? This is from Strata _ T. Again, what makes an A+ setup? It's a leading stock in a leading group. It is a franchise name. It has a great product or great service. It has earnings above 20% or higher, or sales above 20% or higher. I prefer to 30% or higher. It has a composite rating of 88 or higher. It is in a leading group. It's got a simple base chart pattern that everybody can see. Everybody. Focus on those. That is an A+ setup because you're combining both fundamentals and technicals. Take it a step further. No low price stocks. Stay away from those. Got to be in leading groups. And it's got to do about volume of at least 200,000 shares a day. That'll really help you. And you just look, folks, look at the simple base breakout right here. And look at the run. Here, Apple, simple base breakout back here. Clean this off, hold on. Simple base, buys and add-ons. Another simple base. Added on, starts to drop. We sold those shares off. Then it breaks out again right here. Then we buy more. There you go. Look at the volume on that bar, folks. Watch this. Again, we teach this in Mission Winners all the time. Oh, it's just going sideways. I guess if it takes out these tops here, Pat, with volume. Yeah, what does volume tell us? Volume tells us other people see it and they're buying. Again, if it's going up and there ain't no volume, they're not buying it. I don't want to be the Marine on the beach. I'm the only person in the world that sees it. Volume's confirmation. Look at the volume. Folks, on this bar, the stock did 44 million shares. On this bar, 163 million shares. Almost quadruple the previous volume bar. And they voted. There you go. It works. Circle back to this. Okay. Yeah, strategy. What makes an A+ setup? I'll circle this. I'm going to say it again. It's in a leading group. I really prefer the top 40 or 50 groups. Okay, this is CanSlim stuff too, and this is what I taught at IBD meetups forever, 12 years. I want a leading group. I want the leading stocks in that group. I want stocks with great earnings and or great sales. I want stocks with a composite rating, preferably 90 or higher. I want stocks, I hope you're writing this down, I want stocks with an accumulation distribution rating of A or B. I want no low price stocks, at least $12 a share, trades at least 200,000 shares a day. I want stocks that are within 20% of 52-week highs. I demand it. And again, folks, why am I wired so tight? I'll say it again. And I'm thankful it was this way, but it was very hard. I was the sole supporter of a family of 6 with 4 kids in private schools at the same time. Only source of income was investing profits. These are where you had wealthy relatives. No, my dad was dead. No, I was helping support my mom. That's just the way it was. And I ain't complaining. It was life. So these tactics work. Use them. And here's the beautiful part. It also helps you control risk. Price good above the line, bad below. You keep losses small. And that helps. That helps. Strategy. What makes an A+ setup? We've covered that, but I'm going to say it again. It's in the top 20 or 40 groups. It's got a chart pattern that everybody can see. I mean, folks, look at the simple base buy rate. We'll just circle down here. Look at ARC, simple base buy right there. Look at volume that came into it on that bar. I'll slide this back so you can train your eyes on what to look for. Oh, it's just going sideways. Those are clean tops. Yeah, there's some buying in there. I guess if it takes that out, that'd be pretty good. But need volume there, Pat. Yeah, oh boy, I'm glad I didn't buy it. Yeah, didn't trigger yet. We didn't buy it. Okay, but it's still in the base, and it's still above the rising 21 EMA. The pattern's still intact. Oh, by the way, yeah, it's it's an ETF for the leading groups, ARC Innovation. So what does it need to do? It needs to take out these tops, but it needs to do with volume. Look at the volume on that bar, folks. They voted. You say, well, there's some selling volume here. Yeah, it sold down on 17 million shares, and it went up on 39 million shares. They bought the tar out of it there. Also note, a great tactic, look at where it closed. Closed near the top third or fourth of its range. They bought it, folks. And right here, it comes right down to the ADMA and bounces right off of it and continues again. And note the trend up the ADMA and then support on the 21 EMA. Starts to lose it a little bit. You take a little bit off, rolling back here and basing. And then look what it does here. It forms another base. And what do? You see the volume on that bar? Yeah, you buy more. There you go. Rules of proper pyramiding, though. I can't stress this enough. And again, I taught this at the IBD meetups. If your first purchase is X number of shares, your next purchase must always be less than X. Never pull your average price up too high. How do you measure overextension on a chart? If it's made a really big move, well, you can just look at R. Made a pretty big move, starts to stall here. Price starts to stall. You could sell a little bit off. Don't sell all of it. Just sell a portion. Sell off in pieces. Sell 20%. Sell a fifth. Okay, and then try to let it work. Starts to lose the 50-day, you could sell more. You want to see something neat? Tell me people don't use these moving averages. Look what it does here. Comes right down to the 50-day, bounces right off of it. Finds support on the 50-day, next day bounces off of it on a pickup in volume. Rallies down, gaps down below the 50-day, closes above it. Right there. They shake people out. Support on the 50-day, support on the 50-day, bounce off the 50-day on a pickup in volume. I'm going to make this bigger. Bounce off the 50-day on a pickup in volume, and then it marches again. And you're just looking at the day chart, folks. We can breathe. You know, you look at this and you go, this is a nice trend. I'm going to show you why you want to stay away from lesser time frames. I'll take this down to an hourly, and you go, oh my God, look at this drop here. Holy cow, it's the end of the dang world. She's Louise. That's the hourly chart. Okay, that was on August 29th. Go back to the daily. That's August 29th right there. Is that a panic freakout chart? Or no, it's not. It's just basic. There we go. The moral is this. One of the best setups you can use, my screens are set up this way. When I'm scanning, I have weekly charts on the left, daily charts on the right. Let me see if I can get to it real quick. Hold on. There you go. Weekly on the left, daily on the right. This is a great scanning system, folks. Again, and this, you know, I learned a lot of this through Bill O'Neill too. Weekly charts on the left, daily charts on the right. And just scroll down and you can see patterns developing. Well, look at Adobe. You can say, oh, that looks pretty good on the daily chart right here. Yeah, you want to see something awesome? You look at this and think, oh, that looks pretty good. But then you look at the weekly and go, hey, whoa, wait a minute. That's a long weekly base. That's like a cup and a handle right there. See that right there? If you just looked at this, you don't know about this. I'll share this with you, folks. This is a great template. Weekly charts on the left, it's weekly. Daily charts on the right. It'll really help you. We go back here. A+ setup, I think, like I said, what makes an A+ setup? Leading stock in a top 20 or 30 groups that has a simple chart pattern that you can sell or buy in it. It's under accumulation. And it's just, a sixth grader could see it and say, hey, mom, or hey, dad, this thing's kind of going sideways. Man, it looks like it could take off. There you go. By the way, if you have to really look for the pattern, it's probably not there. Strategy. How do you measure overextension on a chart? If it's made a big move and it's pushed away from the moving averages and it starts to stall, okay, or it starts to rally up on decreasing volume, that can be a trigger to sell some. Like, look at this. It's rallying up. Good volume here. Volume starts to drop off. You see what it does here? It rallies up on a big drop off in volume. And then what's it do? It starts to pull back. It's not a trigger to sell all of it, but could you sell some? Yeah, 20% and lock in a profit. I stress, by the way, I'm looking at daily charts here, and folks, I'm not looking at 5-minute charts. Ride that trend for all it's worth. Starts to lose key points, you can take a little off, but don't sell all of it because it's still intact. There you go. Okay. How do you measure overextension? I think we covered that. If it's far, I'm going to go back to this. How do you measure overextension on a chart? It's made a big move. Well, here, right here. Here's a good example. Simple base, and then it lifted up. The spot to buy it's here, okay? Not up here. It's too far removed. Right here. It's a buy here, not up here. Buy close to the simple base pivot, okay? Or don't buy it at all. And I'll say it again, don't chase price. That can lead to larger losses. I'm going to drink some water. Hold on. Oh, need to share this too. Stay hydrated, okay? Coffee is, that doesn't really hydrate you. Tea, I'll drink tea, but water is good for you, okay? Just got to share that with you. Are solar stocks considered choppy for you? Not really. I've owned First Solar and SunPower years ago. They were rocket ships. If they're, here, let's just take a look. I haven't looked at one in a long time, so we're going to punch it up right here. I'm going to punch up SunPower. I guess they're still publicly traded. I haven't seen them in a long time. Yeah, they are. Gosh, it's $1.70 a share. Holy Toledo. And we'll try First Solar. Okay, here we go. There's SunPower. Okay, I got to tell you right now, this is a $1 stock. Stay away from stuff like this, okay? It's $1 for a reason. Don't. Just leave it alone. Here's First Solar. That's 219 bucks. Okay, that's made a pretty good move here, okay? A little bit extended now from the pivot. The safest entry is right in here. By the way, you want to see something? Check this out. I mean, I just looked at this for the first time. There's some clean tops right there, right? Everybody sees it. Look at the volume on this bar, but also look when it starts to pick up off the ADMA. Look at the volume on that bar. People, they look at this stuff. Simple base starts to pick up, starts to ignite. Okay, right here. Volume was just average. That's a trigger right there too, team. Volume was not heavy. The next day it runs up and falls back down. You've got to be careful with it. And then today it gaps up, runs up, and closes in the bottom third or fifth of its range. There's not any power on it yet. Until it starts to show price push with volume, you just got to leave it alone. And I'll say it again, team, the best ones they got a simple base pattern and the dang thing just goes. I mean, look at GDX. Look at the simple base right here on GDX. Look at the volume pickup on that bar. I'm going to do this for you to help. Well, it's just kind of going sideways. There's really not too much to do with it. Well, it's picking up a little bit. There's kind of a company handle here. Volume picked up a little bit, but it's not in play yet. I can't do anything with it. Oh, look at that. Boy, that baby picked up. Look at the volume move on that bar, folks. Price move with volume, pushing through clean tops. On this bar, volume, 20 million. On this bar, 27 million shares. They're voting. I said, okay, maybe I should buy some. And then it follows through with more volume. There you go. And then you get this. And note the trend, folks, up the 8 EMA. One bar, it closed below the 8 EMA, and the next bar, it bounces right off of it. And that entire move, this stock has not closed below the 8 EMA. Trends pay. Valuable lesson. Are solar solar stocks. Are solar stocks considered choppy for you? Not really, no. If they've got a good pattern, a good chart pattern, and I don't know what group they're in right now, but if it's in a leading group, the top 20 or 40 groups, you want to dramatically improve your investing results, folks? I'm going to say it again. Focus on stocks in the top 20 to 50 groups that are within 20 to 50% of 52-week highs. The stocks are no low-price stocks with an accumulation distribution of A or B and a composite rating of 90 or higher. I'm telling you, oh yeah. And last quarter's earnings up 30% or higher, or last quarter sales up 30% or higher. You don't need both, just one or the other. You will dramatically improve your investing results. Yes, and I taught that at the IBD meetups. Okay. And if I was wrong, they'd have yanked me off the stage. So there we go. choppy. Are solar stocks considered choppy for you? No, if it's a good base breakout, lifting off, it's fine. I don't have any problem with you. Why do some traders say to avoid biotech stocks? I'm one of them. I'm real cautious with biotech. Through the years, the biggest disasters I've ever seen in my career, okay, was biotech stocks. They're great when they work, but one news story, they don't just drop, they gap down. And it's painful to see. It's painful to see. I'm not saying don't buy them, but if you do buy, just know any news story could tear the stock apart. Any news story. So just don't go too heavy in biotech. Yeah, they can be great, but I'm big on risk control. I don't want to be doing this I don't want you all to be doing this for the next 6 months to, 5 years. I want you to do this the rest of your life. Okay. And let's lay it out. If we lose a lot of money, we can't do this anymore. So big on risk control, which is again why I'm big on simple basis. Price of good above the line and bad below. And it makes a huge difference. I mean, I'll go back, ANET starts to push here, wiggles around, and you know what we did? We sold a couple times, locked some profits in. It's a small gain, I'll admit that, but what does it do? It made us money, but it also lessened risk, and it also did something else really important I haven't discussed yet. It also lessens stress. Think about that. Stress derails thought processes. There you go. All right, let's move on here. Market context. Strategy. Must spiders, QQQ, and sector ETFs be trending up when you buy a stock? Good question. I'm going to state the question again. Must spiders, QQQ, and sector ETFs be trending up when you buy a stock? I prefer, and I'm big on spiders and the cubes, okay? I will tell you this. I really prefer the spiders trending up, which it's doing, which is why we've been invested. And just look, folks, check this out. What's the trend? You don't have to overthink it. The trend, it's going up. It's going up. Try to get in line with it. That's all. Now, what else could we use? We'll go to QLD, okay? It chopped around here, and then it starts to lift up, starts to pick up. What's the trend? The trend is up. We sold some up here because it's starting to pause a bit. There was some selling pressure. Now we just watch it and we see what happens. I don't know where it's going to go, but I will tell you, by selling some, we've guaranteed ourselves a profit. This stock could fall down to our buy price. We sell the rest for break even. We still made money. The worst case scenario is we'll make money on this. Now, it's not a huge gain, please. I'm not saying that at all, but that is how you manage it. It makes us money, it lessens risk, and it lessens stress. And that really helps us a lot. And I love, here, we own these. Note the simple base right here. Look at the volume pickup on this bar right there. Simple base, and then note the trend. Sold some here, and then another simple base. And look at the volume pickup on that bar. They voted. Yeah, we did too. It's vanilla, just AEM. Simple base right here, buys. Simple base here and here. Look at the volume pickup on that bar. Simple base, buys. ANET, simple base buy here and here. Sold some into strength. I'll stop here in a minute. AppLovin, simple base right here. Look at the volume pickup. And then another one here starts to pick up. Volume pickup on this bar. Not a bad bar here. Volume pickup here. And this is an important lesson. Note the trend. This is the 8-period exponential moving average. Note the trend. We just, buys in here, we'll call it 480. 480 to 640, do the math. We just sold a little into strength up here, and now we'll just let it work. If it starts to fall and lose the ADMA, we'll sell more. There's a key point here, okay? I just want to sum something up for all of us. I really mean this from my heart. And it's something I wish somebody would have told me a long time ago. Focus. And yeah, I've been to Cansom level 3s and I've got Cansom level 4 material here. I know it through and through. I taught it. Focus on leading groups and leading stocks in those groups. Focus on stocks that have a composite rating of 88 or higher and a relative strength rating of 88 or higher and an accumulation distribution of A or B. And I hope you're writing it down. No low price stocks over $10 or $12 a share, trades at least 200,000 shares a day, an accumulation distribution, again, of either A or B within 20% of 52-week highs. Money goes there. There's 30 years of living off the stock market, studying it in that statement. Does it work every time? I'll say it again. Nothing works every time, but it works more times than not, and we just get in it. AEIS, simple base. Here. AEM, simple base breakout here, simple base breakout here. Working. ANET, simple base breakout back here. Runs up, simple base here, starts to stall. And we sold a couple times. Look, see that? Minus 20%, minus 20%. App 11, I've shown you already. ARC Innovation. Simple base breakout right here. Look at the volume on that bar, folks. Here, I'll train this over here for you to train our eyes. It's just going sideways there. I guess if it takes that top out with volume, hey, that might be a good buy. Well, I'm glad we didn't buy it. It didn't trigger. We didn't buy it. Oh, gosh. Look at the volume on that bar. On this selling volume, 17 million shares. Buying volume, 39 million shares. 22 million more shares bought on that bar than were sold on the previous bar. And you get a nice run there. That's what we're looking for. Just want to point that out. Simple base, I don't want to harp on this too much. Simple base, AU or BABA. Simple base right here, watch this. It's easy to see. Again, I'm very pragmatic here. I just don't want to be the only person that sees it. I want other people to see it too. Why? So they'll buy too. Isn't that what you want? Sure. Focus on that. And there's another key point. Price is good above the line and bad below, and it helps you keep losses much smaller. Okay, I've beat that horse enough, so we're going to move on here. What spiders, QQQs, and sector ETFs? I focus on strength. Yeah, I want to see strength. I'll just tell you that. And I don't impose my will on it. I let price and volume guide me. Thoughts on seasonality? Do you step back on size in September since it's historically weak? It's a great question. Yeah, I saw 9/11. Boy, that was something else. Yeah, and even back, I was managing money through the crash of 87. A lot. We were out. The market was telling us back then it was rolling over before the crash. And my managed accounts were out. I'll never forget, I had a grown man, Stan. He's a pharmacist. He passed away a long time ago. And he calls me up crying, Pat, how much money did we lose? I said, we didn't lose anything because you're out. You've been out. And, oh, by the way, I credit Dr. Martin Zweig on that too. And again, I had the great pleasure of meeting him a couple of times. And yeah, we got out. So there we go. Anything else? No, I think that covers it up. I'm going to summarize this, folks. First off, thank you for listening. I hope this helps you. They talk about thou shalt not steal. You can steal money, possessions. You can steal people's time. This is why I don't come in here cold. I have it all laid out on what I want to talk about, fundamentally and technically, to help people make money, make better investing decisions. And simple base breakout. Simple base breakout. Simple base breakout. I mean, look at this. Simple base breakout. Google, simple base breakout trending. Look at the trend of the ADMA and look at the support on the 20. I mentioned this. Oh, they got us find support on key moving averages. Folks, big money uses these moving averages. The 50-day simple, the 21-day exponential, the 8-period exponential. Look at that. Bounces right off the 21 exponential, bounces right off of it, and note the trend. Just let it work. Sell some into strength, but other than that, you will find, team, you will make more money by letting the stock trend for you than getting in and out on all that other crap. Okay? It's too much work for too little money. Let them work. Now, me saying that, I have to stress one more thing. Don't fight it. Don't ever average down. I'm dead serious about this. Never average down. You're wrong. Don't make yourself more wrong. Always control risk, but try to ride them for all they've got. That's how money. Goldman Sachs had a base break here. We'll see what happens. Hood, fun in the neighborhood. Note the base here, buys here, and note the trend. Buys here, we'll call it $54, 54 to $55. 120. Up 50 points on the first buy. That was from a while ago. It was back here. There we go. And I'm not bragging. No. Now, Intel's a special situation. That was a big gap up, but then it pulled back here. And here's a great lesson for everybody. Runs up on heavy volume, pulls back on decreasing volume, and then it turns and starts to lift up. That can be a setup. It's a very aggressive setup, but can it be a chart entry setup for you? Do that when you're advanced, okay? KGC, picking up here, low volume, and then it follows through the next day. And just the trend. Anyway, I've discussed this through examples, I think enough just to show you. I'm going to summarize this. First off, thank you for being here. I hope this helps you. I'm passionate about helping, okay? I want to show you, to teach, to share what to look for and what to do. And most of the news that you need is in price and volume. Don't be ignorant of the news. And team, know those dang earnings dates. Never carry a big position into earnings. You could be a hero, or you could have a lesson that you'll never forget. Yeah, I had that lesson once. And you see 5 figures disappear in seconds. It ain't good. It ain't good. So anyway, focus on simplicity. Leading stocks and leading groups. Simple charts. Look for volume through the pivot. Concentrate on those. Look at the volume pickup right there on that bar. On this bar, the stock did 3.3 million shares. On this bar, 5.3 million shares. It did 2 billion more shares than the previous bar. I'll make this bigger. It's just vanilla. Now, let me clarify. I'm not saying this is some huge monster gain right here, but it's a start. Every big gain's got to start someplace. So I wanted to just, again, try to help speed up the learning curve on what to look for. And another key point, I'm not kidding, this composite rating thing is big. You focus on stocks with a composite rating of 88 or higher, and preferably a relative strength of 88 or higher in the top 20 or 40 groups. And again, composite rating of 88 or 90 or higher, accumulation distribution of A or B, you will dramatically improve your investing results. Yeah, I taught this at the IBD meetups, okay? It works. Anyway, I thank you all for your time. I hope this helps you. I take this very seriously as far as what I wanted to discuss. And I'm big, I'm not kidding. I love simplicity. You want to see simplicity? I just got to show this. I call this sweet potato pie. Look at the base breakout here. Look at the volume pickup on that bar. And then down on the, and then look at the follow through on that bar. Volume spikes. That's institutional buy-in, folks. Get in line with them and let them work for you. There we go. Anyway, this is what we do. This is what we teach. This is what I lived on. My only source of income for over 20 years was investing profits. That was it. 4 kids in private Christian schools. That was it. Never argue with price. Always be thankful. Always be humble. And if you can, try to help somebody else along the way too. So I hope this helps you. I thank you all for your time. Owen and Rich, I thank you for setting this up. But most importantly, I thank all of you for listening, because without you, I'd be in an empty room. So it might even be a padded room. I hope not. Anyway, thank you all very much. Have a good, safe night. And if you have questions, feel free to ask on the big Twitter feed, and I'll help any way I can. Take care. Have a good night. We'll see you tomorrow.